closing pretty flat on the day overall. Not too exciting. Obviously, tech earnings after hours, and then Trump and Xi should start meeting tomorrow, so we'll be getting information out of the news cycle on that, which is probably going to drive up volatility. The Fed cut. We have the BOJ decision tonight. Although a cut or a hike is not suspected, um, several of the BOJ members have come out and openly discussed that they think it's nigh time for one. Which means if there was one, the vote shifted in favor of one, it would be a bit of a surprise. I don't think the markets are prepared for that, especially with yen down so hard against the dollar today. Dollar rose after the Fed decision pretty sharply, as did the belly of the yield curve. The top end picked up quite a bit as well, 10-year back above 4%. The 2, the 5, the 6-month really rocketing up, especially the 2-year up like 112 basis points, which is a really significant move. Remember, if all that short-dated leverage is being used for liquidity on this pump, as dispersion falls off and tech earnings pass, margin requirements are going to tighten, which could drive correlation back up. Obviously, 1-month correlation very low into the end of the day. 3-month, not quite at the local low, but pretty close. Market makers are dealing with a lot of underlying that have implied volatilities that are like 3 to 5x the index. And so, there is at some point a mean reversion in correlation that should be expected. Oil up today, gold sliding after retesting 4,000. Obviously, it could still find support. But near-term strength in the dollar could help erode some of the long positioning there. Oil back above $60 a barrel, and silver moving up. Leverage on the carry bumped into close, both on the short and the long end. The 10-2 fell, but forward yield on volatility picked up across the day, now up to negative 10.64%. Skew pulled back really sharply yesterday. Breadth kind of tightened between the 50 and 20-day movers, so we didn't get that big pump in breadth at the all-time high, or big widening in breadth at the all-time high like we saw yesterday. But that may change by the morning. Correlation between VX and cash VIX picking up, and so we're starting, alongside that increase in correlation, we're starting to get slightly increased volatility, which means that we might start to see the 30-day downside protection pick up. I think we're seeing a little bit of that with VIX 3-month. Obviously, near-term protection to the downside in higher demand. Right, due to the hawkish cut by the Fed, cuts expected into March and June fell very sharply for 2026, with the January cut falling as well. It's now likely that if the government remains closed and data remains obfuscated, that we are probably going to see we're probably not going to see another rate cut this year. A little bit of bull steepening. SOFR hasn't updated yet, and leverage picked up on the day a little. Out here, we got a second test of that upper trend from back in July. We failed that test and closed below the 69.10 level, which is somewhat significant. I guess we closed below 6,900 as well. We would still want to see a loss of 68.36 to the downside, or start to see these gaps filled before we could really confirm a rejection. me personally, I'd rather see like 67, 64 lost to confirm, but which should be about where the 20 MA will be in a couple days, and then the 30 MA below that to confirm a small correction, and then the 50 and the longer term like 2022 trend beyond that. So plenty of levels to confirm any downside move, and no reason to be overly bearish right now, especially with the trade negotiations on the table. However, if they do fall through, then I think the market's going to demand quite a pullback. Once again, tech pretty much supporting the entirety of the market. There was a big move in Caterpillar with earnings. Some of the producer manufacturing did pretty well, but pretty much every other sector, Brad, and even most of the tech services and electronic technology falling. Consumer non-durables, health tech, finance, consumer services, everything selling off. Retail trade. So not very good performance outside of just the largest mega caps, and those don't benefit from a rising dollar. So keep that in mind. And that's about it. Arvana dead. Nice. Ooh, nice. Fuck yes. Beautiful. I hope it stays down there. No, you didn't miss anything. Anyway, that's it. Thank you guys so much for tuning in, and I will see you tomorrow. Later.